This is the Bank Nifty daily charts. As you can see, a green candle form, but downward pressure is coming from the closing of yesterday as well. We're also closer to the 20-day moving average, which is a good sign of consolidation. Let me take you to 15-minute chart to see what can potentially happen for tomorrow as well. So today the market opened up 37,601. It closed yesterday at 37,945. You can see yesterday massive drop down, amazing pullback, and today downward pressure happened, and there was almost 300 odd points gap down in the opening. Like I said yesterday, 37,6, 3650 levels look like a support, and if it breaks that, it can go to about 37,400 odd levels. Market opened below, took the 37,400 level support, hovered around this 37,650 odd levels, finally made a breakout and tried to cover most of the gap. In fact, actually did cover all the gaps that were created in the morning itself. So it was interesting day because option chain around 11 o'clock, and this was what I would consider normal movement during an option chain. Calls were written at 38,000 at around 11 o'clock. So, which is, let me zoom in a little bit, which is this candle here, right? So it's come off from this, it's reaching here. Option chain around here written calls at 38,000, which is here, and puts at 37.5. Market is 37,600. And some calls were also written around 37,500, which is sort of straddles or at the money prices. Straddle prices around the similar time was around 1102. Now this is for the 7th October. Straddle, I forgot to mention, straddle opened at 1130 and yesterday closed around 1094. Again, it was down because IVs went up. A great sign for option writers to start writing because premium decay can actually start kicking in. But we didn't do too much, right? We were waiting to see what the market does, right? We're sort of learning to have patience in it, see when there are turns to start writing calls. Otherwise, just sit in our current positions to kind of adjust things out. So coming back to around what happened around 12:30 or so, um, the straddle was around 1102, opened up at 1130, then became 1102. Just some decay had kicked in around 2 o'clock or so, which is just after this breakout here. Straddle prices had become 1050, and around here the option chain was now markets around 37,700. Calls were written at 38,000 and 37,700, and puts were written at 37,500. And around 2:30 or so, where the market was, say here around 37,800 odd, calls were written at 38,000, puts were written at 37,500. So you see, typically the option chain moves with where the market is. People don't usually play in the money. They end up playing straddles, they end up doing whatever they need to do in order to get that. But in the money, over the last few days, we noticed even though the market was 37, say 500, there were calls written at say 37, 300, 200 levels, right? So that's something that was sort of became normal. I don't know why that was happening over the last few days, but that's something that ended up happening. Overall, the straddle closed around 1008. What opened up at 1130 closed at 1008. So there was considerable decay that finally kicked in last couple of days. We weren't getting that. IVs also closed around 21, 22, which I think in the middle of the day had reached 25, 26 levels at one point. Now coming for tomorrow, what our plan is. One of the things is sure that this level, I would say here, 37,300 levels is definitely what's looking like an interesting support. We have another zone created here, a support zone. So let me make that green. So we have a support zone that is created here. So we've got a range between what looks like 470 or so. So almost 500 levels. So 37 500 is a support. We have another support even over here. Now let me get that here. We've got a support even around this level, which was the big candles 50% that I was taking yesterday. We've got a support around 37 660 odd level, so 650 odd. We're right there, so we have to wait and watch what the market actually does. uh, if it comes down, takes this support, can come down to this zone, test this zone. If it goes up, I would consider marking today's uh, high as a potential small resistance. So 37,922 or so might be an interesting level, or closer to 37,950 odd. I might keep as a small resistance to try and see what ends up happening. And then we've got 38, 100, 200, and then 300 odd levels as resistance. So our range is here. Now, over the last few days, because IVs are high, there's big movements happening. Tomorrow is also the monthly expiry, so big swings are usually expected. So we've got to keep our plans and adjust positions accordingly. Now we've got a slight delta negative position again going into this. We kept adjusting our positions, but we've still got a slightly delta negative play. So as the market comes down, if the straddle and all comes down, we will be sort of in the green and start booking our profits for the week. But overall, like I've been saying, the idea is not to have a fixed idea that, oh, I have delta negative, so I'm going to stick with it. If we see the market start breaking these levels, we're going to start adjusting so that we can build our positions to keep and adding our profits, adding our positions, so we can maximize our profit and end the week in profit.